Hello, everybody. Hello and welcome. So, this is our penultimate installment of the Fintech and the New Normal webinar series that we're running here at UCL Fintech. Welcome, everybody. This is very exciting for me. I think this will be a really interesting session for a lot of people who might be interested in entrepreneurship. And business, whether it's from the starting a business perspective or whether it's from more of the investment perspective, we'll be diving into that a little bit. And I'm really excited. So let's just get right into it. So our very first speaker is someone I'm very excited to introduce because not only do they do very exciting things, but they're also an alum. So that's very close to home for a lot of us watching. So we're going to be hearing from Rishi Khosla. He's the CEO and co-founder of OakNorth, which is a very exciting platform and quite unique in a lot of ways. He's going to tell us a little bit more about it. But he's, got experience in entrepreneurship as well, as he previously co-founded Copal, a financial research firm, which was then scaled up and sold off. So he'll tell us a little bit about his experience and answer some questions. And if you have any questions as well, please feel free to put them in the comments. But for now, we'll welcome Rishi. Hello, Rishi. How are you?
Excellent, Serena. Very good to be with you guys this evening.
Thank you so much for being here. So if you wouldn't mind, would you like to just introduce yourself and say what OakNorth does, and I guess what makes it unique at the current time?
Sure. Basically, OakNorth's a business which is being built to service what we call the missing middle. These are businesses which are larger than micro businesses, but smaller than large cap businesses, which generally have been the blind spot of banks and lending institutions for decades. We built a technology platform to do that, and we also have our own bank where we use our platform in the UK to service that particular segment.
Okay. And did you feel that was a segment that was particularly underserved before? Is that
Massively.
what?
I mean, whilst we were building our previous business, we actually had experience of that, and that was all the way back in 2005. And like all good things, you have a bad experience, and you say you're going to do something about it, and that's what we decided to do. So we decided to build a whole business to solve that problem which we had.
That's amazing. I'm sure a lot of the people watching will definitely feel a little bit reflected in that, because a lot of student entrepreneurs definitely, when they come up with their ideas, they do so, responding and reflecting their own experiences. And I suppose, as someone in the position, because OakNorth is so successful, right? You quickly achieve profitability, you're scaling, you're growing internationally. So I suppose the question is, how do you build a business that's going to be resilient and that's going to have a viable business model? What characteristics would you identify in such a business? Like when you build something, especially given the current situation, people are definitely concerned about resilience at the moment. So how would you go about explaining what a resilient business model is to you?
Well, I mean, again, we're pretty basic entrepreneurs, and in our view, it's pretty basic. You build a business to make money, right? And if you build a business model which is focused on actually making money, hitting cash flow positive in a short period of time, and actually, building profitably, that gives you resilience. Any business model where you don't have that, you have to have the benefit of substantive capital and investors who are willing to continually fuel that capital for you to be able to actually sustain a business where you have a large loss, a large accrued losses before you actually get to that point. So ultimately, in my view, resilience just comes with a very boring traditional business model of making money.
Mm-hmm. That's good. Well, that's definitely very universal. So in your eyes, I suppose the current pandemic won't change at all your mission or how you go about building your business.
No, if anything, it just accelerates it, because you have more businesses which actually need the support and need to be able to rely on lending to be able to get through this period. So ultimately, it's an accelerant rather than anything else. And I always believe in any crisis, you get some of the most resilient businesses are born, are scaled. As an entrepreneur, you just learn, you just build tougher skin. And that's ultimately a good part of sort of the entrepreneurial journey.
Mm-hmm. I'm going to go off a little bit. You were speaking just now about how, there's more and more businesses that are needing a little bit of support now as it's getting a little bit rockier for them, especially the smaller and medium ones. And I guess a question for that would be, do you think that there is a difference between how the the companies that you target, which tend to be, if I'm correct, on the larger end of SMEs, is there a difference to how they're handling this crisis versus, a lot smaller or a lot bigger?
So a lot bigger, I would say, have always had better access to capital. I would say actually even a lot smaller, through the last 5-10 years, with the advent of peer-to-peer lending platforms, other platform lending businesses have ended up getting lent to better. Within the missing middle, those businesses ultimately haven't had the benefit of either of those trends, and therefore, as I said, sort of just get left behind somewhat. So I would say that's probably one of the hardest segments. And clearly, look, in the UK, if you bring it to the UK, the government's done a lot for all segments. But clearly, the bounce back loans are 100% guaranteed loans, which fundamentally have very basic eligibility criteria. So if you're a very small business, your ability to get your hands on one of those is much easier than getting your hands, for example, on a CBILS loan, right? So therefore, I would sort of say still getting lent to in the missing middle is probably the hardest segment today.
Mm-hmm. And then, obviously there's a firm like yours who's providing a service specifically tailored to this kind of company. And now, you're licensing your services abroad, so it's starting to grow abroad as well. But is there anything that these firms can do themselves to position themselves to kind of weather a storm like this better, or future similar storms, do you think?
I mean, look, for any business, if you go through a crisis, the key thing always to do is to parameterize what your downside looks like, and then play for the upside. It's always good to know sort of what does a bad case look like. Make sure you're resilient for that bad case, and you know exactly what you'll do if that plays out, and then in a way put that up on the shelf, and then just go and look for the opportunities. And I think in any business at any time, there are opportunities to change, to adapt, to evolve, to actually take advantage of things.
Mm-hmm. Okay. I think I'm going to take it a little bit in a different direction now and talk a little bit more specifically about OakNorth and what you guys do. So, for a lot of people who might be interested in finance, they might be hearing just sort of traditional lending, I suppose. But what makes OakNorth special is the fact that you guys really integrate technology. You guys really are a fintech. Could you speak a little bit about, the technologies you use and why you think they add value to the services you offer?
Sure. So if you look at commercial lending generally, in terms of actually doing the credit analysis, making the decision, monitoring loans, generally everything's done offline, done manually. Very different from small ticket lending, which clearly is much more automated and driven by sort of at least the initial revolution which happened in credit cards and then came through into lending. So within this segment, what we've developed is a platform to actually help conduct the credit analysis and the monitoring of commercial loans using data sources which tap into both traditional and alternative areas and are very specific to the industry subsectors. So we divided the world into 1,600 different subsectors. We've identified data sources for each individual subsector, traditional, alternative. We pipe that into our platform, which actually helps us then, as you get a particular opportunity in one of these subsectors, run scenarios, run the right type of analysis to then be able to come out with what does a credit view look like of that particular loan, and then on an ongoing basis to monitor it on that basis as well. So you're sort of combining analytical technology with large data sets.
Mm-hmm. And that seems like it would mean that the labor force, I guess the talent that you guys are seeking, would be a different landscape to those in traditional, I suppose, to more traditionally focused banks. Do you think that the talent
No,
and the way you
massively.
go about, sorry?
Massively. So I
Mm-hmm.
mean, so effectively we have what we call credit scientists, which are a combination of credit analysts and data scientists, because again, wherever we're touching data, our objective is to effectively get to a point where the machine learning does more and more of the role and much less gets done manually.
And do you think that this is a trend that we're going to see movement in all sort of aspects of commercial lending, not just from a fintech, but the incumbents are actually going to start moving this direction? Because as we've seen, OakNorth has been highly successful in what it does. Do you think it's a model that bigger banks are starting to move towards?
I think it's a model which every large bank should move towards on the OakNorth platform.
Oh, okay. I like that answer. And speaking on that, actually, so the platform is actually being licensed out
Yep.
internationally.
Yep.
And I was looking into you guys, and so it seems like you had trouble securing a loan here, then ended up getting a much larger loan actually abroad, right? In America, if I'm correct. So do you think that like that geography basically plays a lot into how your services are received or the kind of services that are
You
required?
know, the same issue of the missing middle applies nearly in every major market, right? The difference is that in our own experience, we never got loans from commercial banks, but ultimately the US bank that we got it from was an investment bank, and we got it from their proprietary trading desk. So ultimately it was about going to the guys who do large cap loans and getting them to do it. So it's much more sort of who you were going to rather than the geography of where they were.
Okay, that's interesting. And do you think that that's a model you'll continue to focus on a lot, the licensing of a platform,
Fully,
moving to kind of banking as a service as well?
without a doubt.
Hmm. Okay, that'll be interesting. I think for a lot of people, it's an interesting idea that they might not be aware of is like a company licensing its material out. What prompted you to consider doing that rather than just setting up base internationally?
The mission was very simple. The mission's always been to help solve borrowing for the missing middle, and our view is in terms of the ability to get that done quickly at scale across major markets. Having a model where we actually enable the incumbents is a much quicker way, much more scalable manner to achieve what our mission is, rather than trying to go and set up our own lending institutions in each individual market.
Hmm. Yeah, that makes sense. And if I move, I suppose, back to a larger lens, is, for the people who might have been considering going into entrepreneurship and they were considering actually getting loans, what do you think? Do you think anything has changed in the landscape now because of the pandemic at all?
I mean, look, the amount people's risk appetites in terms of their willingness to lend, to invest, etc., has all pared back, which is somewhat expected in the current environment, given when there's uncertainty. People generally tend to be much more cautious. So I think, inevitably that's happened.
Mhm. And regarding the pandemic as well, a lot of institutions are now starting to use data basically to mitigate the effects and to learn more about it and respond more dynamically. Do you think that the institutions adopting this kind of technology will spread? Because there were with the loans in America, a lot of people were not satisfied with how the government carried out that situation. Do you think that it'll be time for the institutions to step in and encourage the applications of data in fields such as lending as well, or do you think it'll be driven by lenders and borrowers?
So, like I mentioned, we're already using significant amounts of data in the decisioning that we run through our platform. In terms of other institutions wanting to use data, look, that's absolutely increasing, because when you can get granularity and you can get a better handle on your exposures, clearly that's better than not. And that's actually why with our platform, for example, we're getting a significant acceleration in adoption by other banks as a function of that.
Mhm. And we've just gotten a question from a viewer who's asked, what the types of data that OakNorth uses. And I guess following on from that, do you have any thoughts on, methods of collecting data, or, thoughts on, the uses of data and due diligence, I guess, in business in general?
So in terms of like the type of data, it totally depends on what sector. So I don't know, if you're running a analysis on a furniture manufacturer, you'd be looking at sort of what's the cost of raw material, what's the cost of processing, i.e. production, what's the cost of distribution, what's the cost of sales and marketing, what's happening to demand in different segments, etc. So it's all really fundamental data, and like I said, sort of mapped across what's relevant for each of the individual subsectors across 1,600 different subsectors, right? So there are thousands and thousands of different types of data sources which we're getting. So that's the type of data. And sorry, the second part of your question was?
Was on the collection of the data.
In terms of the collection of the data, I mean, look, there's even if you're using third-party data, there's just such a challenge because so much of it is unstructured data, and you're trying to take unstructured data and make it structured to be able to help actually create a framework of analysis. So that whole process is incredibly how can I put it, challenging. In terms of for ourselves, given we also do help organizations monitor loans, there's a significant amount of data which we're generating within our own platform, which actually over a period of time will both give us we've already got depth, will give us depth and longitudinal data series, which I think will be incredibly valuable.
Mm-hmm. And so then that comes back again to, I suppose, having talent that's really going to be focusing on, that's going to be really qualified about this particular market.
Yep.
And I know we have some members who are master students who study, business intelligence, data science, this kind of thing. And then we also have a lot of undergraduates. So would you recommend that they at least find some sort of skill set relating to data science and these kind of quantitative analytical methods?
Look, I mean, again, to make that very broad is always hard. Do I think data science is of value? Do I think its applicability is broad across lots of different domains? Absolutely. But do I clearly is a sort of is a sort of like a need to have for every graduate? That's a really hard one, but I'd sort of say it's an incredibly valuable skill set.
Mm-hmm. And I suppose for a lot of graduates, they're deciding as well. They hear about, successful fintechs like yours, maybe people who maybe had thought that they were definitely going to go along a traditional career path of, joining a big company and then just kind of sticking in the corporate space. How I suppose, what would your advice be? Should they stick with it, or should they jump into something totally new and start a business that's unique and in a market that's not really served, like OakNorth? Or I guess, how would you counsel people who are concerned about what to do with their careers?
Look, I'm absolutely an entrepreneur, and for me, spending a life in a large company in a corporate environment is the most boring thing I could ever imagine. Now, for some people, you know what, that works, right? So it all depends in terms of how you're built, the fun, the impact you can have, the learning you can have, the difference you can make in the world is just totally different, I think, as an entrepreneur. And whether that's joining an earlier stage business, setting up your own business, for me, that's incredibly rewarding, because again, you go start something and you create and you evolve. Even if you join something early stage, you see it evolve, and you've had a significant part to do with it, rather than sort of a cog in a very large machine.
Mm-hmm. And yourself, in your own experience, when you founded OakNorth, and I think also when you previously founded Copal, you did it so with the same business partner. So I presume that it's been, like a very long and successful business relationship. How would you counsel people to determine whether or not someone is a business partner that they can work with for the long haul?
I mean, look, so 100%. Incredibly valuable to have a strong business partner, because it's an incredibly lonely journey being an entrepreneur. The fact is, it's closer than many marriages in terms of the interaction that you have, right? So it's sort of you need to make the choice really carefully, and sort of based on a lot of knowledge on how you guys sync as individuals, and how the chemistry works, because there's going to be ups and downs all the time.
Excuse me. Yeah, that's definitely, I think a lot of people are definitely worried about the loneliness of the mission and about making mistakes by themselves when setting up a company and not having any guidance. So for students who know they want to be entrepreneurs, they're like you, they can't imagine sitting, in an office all day, working under 300 people. Where would you say they should go to be mentored, or where should they seek advice? Or is it just 100% trial and error, do it yourself, fail yourself?
I mean, look, I think the value of mentors, good mentors, is incredibly high. And ultimately, in my view, go and think about the best mentor for whatever you're going to do, and just approach them and just ask them for 10 minutes of their time. And it's amazing if you ask what you get. And sometimes those relationships can evolve. I mean, UCL has access to also lots of great alum, etc., which could be helpful. So I think there are lots of avenues to find a good mentor. Again, there just needs to be a desire to go out and hunt for them.
Yeah, that's true. Hopefully people will take a look at the UCL alum and find some really exciting people like how we found
Exactly.
you. Yeah, we got really lucky. Um, and you mentioned earlier that, people might be entrepreneurs looking in a lot of different fields, the members who might be, watching this now or later when it goes up. Are there any fields that you think like COVID will particularly impact more or less than others? We've heard from other speakers that they think that for fintechs and tech in general, this is, like you said, it's really an accelerant for those kinds of services right now. Do you think that's true, or do you think there are any industries that are going to have a harder time of it?
Look, I think that's definitely true. I think that that fintech specifically gets an accelerant out of this. Are there going to be sectors which suffer? Of course. I mean, physical retail, it's going to have an accelerant on a trend which was already playing out, but a negative trend, right? Not a positive trend. Well, how's it going to play out for, I don't know, commercial office space? Unclear, right? There are other industries which clearly short term, even maybe in the medium term, will get hit, but will probably rebound, like parts of the hospitality sector. But you sort of put those aside. I mean, generally for tech, this has to be an accelerant.
Mhm. Also because for tech, working from home, which is kind of where everyone's at right now, is a lot easier and even a lot more common before. So they have a starting place from which to continue to stay efficient and be productive. Is that true at OakNorth? Um, are you having an easier time, do you think, than other firms with maintaining productivity and work during this time?
I mean, look, I think that if anything, productivity has actually gone up during this period. Um, is it sustainable at these levels on a long-term basis? Probably not at sort of how much it's gone up. But in terms of the transition to working from home, given that we're a fully cloud-hosted business, it was incredibly easy to do the switch over. So without flaws. So it's been fine, but clearly there's an immense amount of value from a social perspective, from a culture perspective, of bringing teams together and having that physical interaction, which I know for a number of our team is something which is missing in sort of the isolated environment of working from home.
And so you think that eventually firms and even OakNorth will regress back to a majority of time being spent physically in the office? You don't think working from home will persist as a trend, as some people think it will?
I think working from home will definitely persist as a trend. The question is, will it be the minority or the majority of what people do? And I think most firms will say some part of their employee base will will work from home on a continuous basis. Whether that's the same roles or not is TBD. But look, I think most people will make some structural change, but whether that's the majority of their teams or not, I think fewer firms will move that way.
Hmm. Okay. And you mentioned earlier that it's easier for you as well because you're totally cloud hosted as a business. And we see that, I think, in a lot of like banking as a service companies or companies that offer services that way. It tends to be easier. Could you maybe speak a little bit about the differences between cloud versus physically hosting, just for the people who might not know too much?
Sure. The simple fact on cloud hosting is that you're not tied into a more rigid environment, and fundamentally you're used to accessing your environment over the web. So it almost doesn't matter where you are, as long as you've got connectivity, you can access your environment, and that just totally changes the flexibility of the architecture and the infrastructure which you have, and your ability to add more processing capability if you need it, because volumes are going up. More people are online for more of the day because there are less, offline meetings, etc., etc. So all those things are so easy just to scale up infrastructure in a way where it's really not on a physical basis.
Mhm. So it seems like for you, the goals aren't going to change at all about this pandemic. What, I suppose, should we be looking forward to from OakNorth, for this year and, moving forwards? Is there anything particularly that you're really keen to work on?
I mean, ultimately, it's continuing our mission. I mean, I believe in massive focus and sort of keeping fully aligned to the goal, and therefore accelerating the effect that we want to have on the missing middle.
Mm. That's I like that. It's catchy. um, and for students who are aiming to join a fintech company, and I know a lot of students are worried, actually, on the previous topic about quantitative job skills, that, they aren't hackers, so they can't work at a fintech. Do you have any thoughts on, is it really just a whole bunch of computer programmers, or, should people
Look,
still?
there are lots of roles, right? There's
Mm,
sort of the product role, there's the marketing role, there's the client role. So there are lots of different areas within any fintech business, within any business. So yes, sort of the coding is a core part, but there are lots of other functions around the business.
mhm. Okay, and we're just now running out of time. So if you have anything that you'd like to leave the people who might be seeing this now or later with, any final thoughts for students who desperately need the advice?
The best time to start a business is now, and the toughest time always teach you the best lessons. So if you've got an idea, you should go for it.
Amazing. Thank you so much. Hopefully,
Thank you.
people will take advantage of that advice and definitely listen to it closely. Thank you so much for being here, Rishi.
Excellent.
Hopefully, we'll
Take care.
see more of you around. Bye-bye.
Thank you. Bye.
So that was Rishi Khosla, the CEO and co-founder of OakNorth. It's a really exciting company. I recommend you check it out. And now we're going to move straight right into our next speaker, who is someone who is going to present probably quite a different perspective than the previous speaker we just had. So we're going to hear from Anthony Craufurd, who is the director of Visa Ventures. So he's working on ventures in Visa in Europe, and he's going to tell us a little bit more about what he does and introduce himself now. So welcome, Anthony. How are you doing?
Hi, I'm very well. How are you guys doing?
I think we're doing as well as we can. I think, given the circumstances, try not to go stir crazy, right?
Yeah, unfortunately now, so I live in Reading, so the idea of going out of my house as the quarantine was lifting is now slightly less appealing.
Yeah, I can see how that could be the case. Oh,
Yeah, so interesting times.
Definitely is, but at least we can take your mind off it with some fun, juicy talk about fintech. So if you could just introduce yourself quickly and your role and what you do.
Yeah, so hi, I'm Anthony. I've been working at Visa for almost 10 years now. And my current role is in the venture organization, helping Visa find and identify startups across Europe, build commercial partnerships with them, and figure out how we can work together and where it makes sense, making equity investments.
And so obviously everything's kind of going insane now. Do you think there's a difference in what you're looking for now versus what you have looked for? Or, are you kind of constantly reevaluating what you're looking at?
So I think the entire ecosystem has gone through a strange little kind of 3-month roller coaster, right? And I think we're definitely into kind of Act 3 now. Like Act 1, there's a financial crisis brought about by the virus. Everybody's in not quite panic mode, but battle stations. Do we need to get ready? Sequoia put out a memo, which everybody gets scared about. And there's an initial, everybody's triaging and firefighting. Then we hit this weird pause through kind of like April and May, where everybody's like, we're wondering if the ecosystem's going to recover. Is everything going to be okay? And it was very easy to just say, we're going to wait one more week, one more week, one more week. And we had this kind of just stasis and hiatus in the middle. And then it seems in the last month, all of a sudden, everybody's just about kind of reopening and saying, okay, we are clearly in this for a longer haul. It's not going to go away. We've got a 12-month problem, not a 12-day problem. What do we need to do about it? How do we plan? And now everybody's starting to really look at what does that mean for opportunities as well. I think this is acting more of a catalyst to a lot of the changes that were already in flow and a lot of the issues we were already seeing in banking and fintech. And this is just bringing a lot of them to the front. And I think for a lot of the big traditional banks, kind of really forcing them to make some harder decisions than they were ready to.
Yeah, and that's actually one of the questions I was going to ask. Is a lot of previous speakers in other episodes of the webinar have really brought up how they think that this is only speeding up the applications and the adoptions of technology in basically all of the aspects of life that we could have had now that, we need them even more than ever. Do you think there's are there any things that you would particularly point out that have suddenly kind of gone a lot crazier than they would have otherwise done?
I don't think anything has gone crazier than we expected. I think we've seen some weird behaviors which are just not going to continue. So in Germany, we saw consumer loans defaults drop, right? So all of a sudden, the saving rates in because everybody's locked down at home, we're seeing this huge short-term spike in saving rates in a lot of European countries. And so the common logic of, we're going to have a recession, we're going to have a lot of people made unemployed, you're going to see spikes in defaults on loans, higher loan loss performance. And all of a sudden, that just didn't happen in the consumer industry. All of a sudden, it's like, oh no, consumers are just putting money away, they're paying their debts. Like the reaction from national governments to create mortgage holidays, etc., actually really cushioned the blow for the majority of people. And so where we'd have expected to see a surge of people moving to alternative lenders or alternative credit, it's actually been the best opportunity for a lot of the incumbents to defend their patch and look after their kind of high quality customers. In payments, we've seen a great acceleration, right? I think it's been fairly well documented, but people have been saying cash is dirty, don't go passing that around, you should be using card, which we're not unhappy about, obviously. And then the growth of e-commerce, again, has been pretty good for our business. But the side of it, which if we want to be slightly more negative, nobody is traveling, right? And we think that's probably going to continue for 12 or 24 months at least. So normally people would already be booking their holiday for next summer, and that's just not happening right now, right? Nobody's taking that risk. So we're seeing swings and roundabouts. The economy's moving in a bunch of weird ways, and I think we're still not through that slightly topsy-turvy time. Give it another month or two, I think we'll get to September, October, and then it will start to look more like a predictable trend. But right now,
no idea.
Nobody has any idea which way things will go.
Okay, well, fingers crossed that it does settle down and we don't have that scenario of let's just give it another week. Oh, we'll see what happens in another week, right?
Well, even on that side, I think people are now just becoming happy with that sort of risk they're going to have to take. But if they're going to take increased risk on timing of doing a deal, they really need to de-risk it on other aspects, right? So you're seeing the focus on the quality of deals that are going through and the focus of the background that's needed. That's probably where the swing is, right? We're seeing lots of bigger companies raising, like Checkout just putting together that big round, right? That was a company profitable, has strong revenues, has strong growth. It now is a perfectly good time to invest in an e-commerce acquirer.
Okay, so there's positive spots, I guess, that people can look to. And someone's asked, what are your thoughts on will anything change about your strategy or Visa in general in the event of a second wave? Does that change anything?
I don't think so, right? Our long-term strategy, we have a huge benefit of being Visa that we're in an industry which is fairly slow-moving most of the time.
Mm-hmm.
Contactless at the moment is like being talked about as a great success, but the first contactless transaction started in 2007, right?
Mm-hmm.
And that's taken us over 10 years to get to where we are now, where it's still not the default and still not the basic thing. So I think a lot of Visa's longer-term strategy will probably stay the same. It is all about growing digital commerce. It's about making that world better. Some of the tactics might change, right? So I think in the short term, the small enterprises, small businesses who are being forced to go online for the first time, the drive for that kind of multi-channel, I'm not going to say omni-channel because it's not really true, but moving into that multi-channel commerce, there's huge opportunities to help this businesses who are making that transformation right now. There'll be a lot of them doing quick and dirty things just to get it working, but then they'll start to think about their business in that way over the next 12 or 24 months. I think, as an example, a lot of the coffee shops, like we know that London is full of lovely independent coffee shops who will have their own house blend of espresso beans.
Mm-hmm.
They can't serve coffee, but they're all now online selling you a kilo of beans at a time and starting to build an internet presence. And how does that stuff translate? How does those, is that something that's just going to continue because people are going to work from home more? And all of a sudden, these independent coffee chains need 10 or 20% of their revenue to come from e-commerce.
Mm-hmm.
I think there's a lot of those shifts, which in the short term will put more energy and focus on, because that's where the greatest pain is in the industry right now. But for our long-term strategy, yeah, it's still about digitization. It's still about being the best way to pay and be paid.
Mm-hmm. I was actually going to put to you the same question I put to Rishi from earlier, which was about, the importance of a resilient business model and what you think that means. But it seems like you've just brought up, for instance, the example of these indie coffee shops that are moving online. So do you think that it's actually more important to have to be adaptable rather than to start out with a quote unquote resilient business model?
It depends what industry you're in, right? So I think if you're in retail and you're smaller, you need that agility, right? I think even the coffee shops, you see them changing their menu, and then all of a sudden they all needed to have red velvet cake on the menu a couple of years ago because it was this ultimate photo for Instagram, right? You want a little flat white and the red velvet cake, it looks amazing. So they all just had to have it. It was impossible not to, even though it's just a vanilla sponge cake, right? So you see a lot of that stuff happening, and a lot of those business owners already live that way. It's just now they're being asked to do it with different skills than they had before. When we think about it in banking, I think the challenge, and I think Rishi nailed this part of the question, is it is just about the ability to be profitable and generate cash. And I think what we're seeing is the businesses who really nailed that and the fintechs who had that in mind are doing fine. And the ones who really didn't have that revenue as their number one mission are having to make compromises, right? The challenge I think we have in Europe on that resiliency is banking specifically has been under pressure for a number of years. Interest rates are at all-time lows. So how do you make money on lending? Transactional revenue is the other big half of it, but increasingly consumers are being told they can have everything for free and they can have it cheap and easy. And the traditional banks are really struggling in that environment and having to cut costs. I think the guys at OakNorth have shown an amazing example of actually they can offer a much faster, higher quality product. And they can deliver it at a far lower cost than a traditional incumbent bank. So they can create margin where it was completely squeezed out before, and that's been a huge part of their ability to be profitable since day one, right? And that's a huge advantage for them as a business in this economic downturn when everybody is squeezed. If you have more margin, you can take a bigger squeeze, right? People like TransferWise who've got customers used to paying fees for services and saying, this is what you're paying for, we'll make it cheaper when we can, have got that in their back pocket, whereas we've seen that Revolut are getting all up in arms because people are telling them they're going to charge them for FX rates at the weekend and charge them on a Monday and a Tuesday and a Wednesday. And that's not the promise that consumers had, right? And so it's much harder to increase prices when from 0 to 1 than from 1 to 2.
Sorry about that. I think my Wi-Fi has just done something strange. My apologies.
Not
Um,
a problem.
but I think I heard you leave off on the pressure that's on kind of the businesses with the smaller margins. And so would that be one of the things that you look at in your position? Are you looking at margins now, or do you think that this is going to kind of increase the importance of margins in a business when, investors consider where to put their money? Is this like a new?
Yeah, naturally, I think when there's other stresses, like your contribution margin becomes much more important, right? And I think we're seeing it in our existing companies are kind of really sharpening their pencils on their marketing spend is such an easy thing to cut in a time of stress. But you really need to know, like, your CAC and LTV numbers need to be really tight so you can understand when you're dropping your marketing costs that you are going to have a revenue cost, and keeping it really clear. And you'll see that, I think, for all deals being done, founders and CEOs and CFOs especially, you can draw that line of exactly where the revenue comes through, what is the value of every single client we have, and can we price that effectively. You just need to be able to understand that at the current time. I think we're seeing it, businesses we've invested in and ones we're looking at. That's the key question at the moment. It's not just about how much revenue you have, but the quality of that revenue and how well you understand it. Is it under a 5-year recurring SaaS contract, which means it's going to be locked in and has room to grow? Are you having to kind of just pay marginal usage fees, which, if you're doing a kind of pay-as-you-go API model, which lots of the fintechs were, and the volume is zero, your revenue is zero, and that's not such a fun place to be.
Doesn't sound like it would be. And someone here has brought up in the comments China, actually, and that ties in a little bit to what you mentioned earlier, how you said that the first contactless payment was in 2007, and it took us this long to get here, but here isn't even halfway to, China, right? So from your perspective in Europe, I guess, which I assume is where most of your investing happens, do you think that there's going to be a difference in how fintechs handle this and payments, for instance? Do you think there's a difference in how payments comes out the other end of this versus businesses abroad in Asia, for instance, where there's so much more adoption, or America, where there's, I guess you could argue, less adoption, for instance?
So I think payments is a two-sided network, right? And I think if you ignore the technology that's being used and you just look at the power of each of those individual networks, I think increasingly it's about where do you have the density and where do you have the activity, right? So if you look at a lot of the big WeChat Pay, Grab, etc., in Southeast Asia and China especially, they've built incredibly dense networks, but they're all domestic, right? But they have huge transaction volumes at very low fees, and it all works within that ecosystem. Visa, we've got the same kind of effect in places like the Nordics or the UK, where we're at very high penetration. We're seeing high uses of card in face-to-face, high card penetration in e-commerce. But that's our kind of existing business, is fighting to get that number as high as possible, right? We want to be used in as many different contexts and be the preferred customer choice. So I think they're going to all face the same challenges. I think those businesses are still going to need volume going through them, and an economic slowdown for everybody just means everybody's spending less money, and we're all going to be squeezed the same way, right? So the advantage we have in a certain way as cards in Europe, right, is there's a lot of physical infrastructure which is ingrained in every shop. And yeah, we, ignoring the recent kind of court cases, that's kind of the relationship between Visa, the banks, and the merchants is pretty symbiotic. We all benefit from it, and we all need to just find a middle ground to keep it moving.
Okay. And so then from the perspective of someone who's in charge of ventures, and talking a little bit more about the companies you work with, are they mainly European, by the way?
Yeah. So yeah, as an investment group, we're obviously a global team. I cover just Europe, which is kind of political Europe. So the European Economic Area is within our region. The way we work with the startups, we're looking to partner with startups and invest where we can make a difference in that company, and where it's going to give us maybe a slightly different relationship than just an arm's length commercial relationship, right? And so for us, and the kind of your org chart is your product. I report into the European CEO, who has the European revenue for Visa as her number one number, right? And so anything we're doing is typically focused on how do we drive product adoption or drive visa revenue and activity in European focus. And given what we've got with PSD2 and a lot of the regulation around SEPA credit transfer, DDs, etc., IFR, we've got some very specific scenarios in Europe. And I think we kind of touched on it at the beginning. The traditional banks who are our traditional clients are all under pressure. And so when we're looking at investments with a European context, it's how do we help that client base? How do we help that ecosystem to perform better and increasingly drive better customer outcomes?
That's interesting. And so you brought up political Europe. And I don't
Yes.
want to turn this into a discussion that's too spicy, but I have to ask, do you see any problems arising out of the current Brexit situation? Do you think any thoughts on that, or is that just what it is?
It's going to be volatility. Personally, I hope we stay. I think we get a lot of benefit from the cooperation, right? I think we're just going to have a bit more friction. We've all seen the power of passporting. That's probably going to be reduced, right? We're going to see less talent coming in and out of the UK and in and out of Europe. As Visa, we're fairly well insulated, right? Because we operate on both sides. So we have European businesses, we have UK businesses, we've got both in our investment portfolio. It's not like we think that the UK is going to disappear and Europe's going to go up or vice versa. But it's just going to increase friction, which is going to make things slightly harder and slightly more expensive for everyone, unfortunately.
And like you mentioned, PSD2, and Europe has a lot of is quite careful about regulating a lot of things, and they seem to be, I don't know, setting standards globally, I guess, for regulations. Do you think that the UK is still going to keep up with regulation? Do you think there's going to be a divergence there?
I think it's really strange on the way that, especially if you look in the fintech world, the FCA is probably one of the most progressive, involved, and active regulators in Europe, right? The European system for regulation of setting standards on a kind of European basis has always tended to be slightly following what's actually already occurring. So I think there'll end up being close alignment between the UK and European regulation, but it won't be as deliberate as it is today. I think it'll be much more, well, we should probably be aligned because it'll make it better for everyone, rather than a very deliberate, let's choose one standard that we should all comply with. Even today within PSD2, right, there is the local authorities get to implement it in a way that they believe is best for their country, right? And we're already seeing enough divergence in those standards from France to Spain to Italy that there's already weird complexities being formed. The way that IBANs and passporting works already has weird complexities, which it's not a perfect single market yet.
Okay, so it'll just be, more weird complexities, or the same weird complexities remain to be.
We've already got problems of like 16-digit versus 19-digit IBANs and these kind of things moving around. It'll just be another variation, and unfortunately, whoever's filling in forms, etc., is going to have another set of tick boxes for the UK.
It'll be interesting to see. That's definitely for sure.
February 1st will be the telling point.
Yes, that'll be interesting. And I suppose for the firms you work with, this is kind of like just taking a total different angle now, just like talking about something different. Rishi, before, he was pretty clear that he is not a corporate man. He's not going to be a corporate man. He hasn't been a corporate man. But I expect that you have thoughts on why, working at Visa and then as a firm, taking investment from Visa would bring, a lot of value. Can you communicate some of that?
Yeah, so I think on the being an entrepreneur versus a corporate, right? I'll play the corporate fiddle for the audience, right? We get huge amounts of benefit, and I personally get a huge amount of benefit from having the Visa brand behind me. If I walk into a conference, nobody actually really wants to speak to me. Nobody actually wants to talk to me about their startup. What they see is Visa, and then they see dollar signs, and like, that's a big company who could really transform my startup, right? So we get tremendous access, way above and beyond any like individual reputation I may have or not, right? And I'm super aware that nobody really likes me. They just like the brand on my t-shirt and the hoodie. So I will wear it every time I have to go to one of these events. It's fine. And that's a huge accelerant, right? Especially when you're younger in your career and you don't have the kind of credibility that people like Rishi have built over the last 20 years. So having that behind you is a huge huge benefit, and it gives you again leverage to do stuff on a scale that you might not have your own benefit. The dollars I've been allowed to invest or work on deals related to on behalf of Visa, I don't think I would ever find an LP in the public market who would let me have that money and pay me 2 and 20 to do what I get to do at Visa, right? So that's a huge advantage. I mean, if anybody wants to offer that job afterwards, we can talk about it. But yeah, given where I'm at, it's been a huge accelerant. And then why would a startup choose to work for Visa? It's the same reasons, right? It's the promise of that scale. We operate 163 currencies, countries all over the world, moving trillions of dollars of payment volume every year, right? And we're one of the few companies in the world who can talk about trillions of dollars, which is quite an exclusive club. But there is a completely double-edged sword to it. And the same as the leverage that it gets you is we are a big corporate and we are a bit slower. And you have structures and hierarchies and internal politics and various things like that, right? So we get this huge leverage, but in order to bring the most of it, you need to work with that organization to bring it with you. And that's got some pain and suffering. It's a skill on its own, I think, and it's probably where it's a very different thing. But if you have the benefit of someone like Rishi of saying, I don't want to deal with that, I'm going to do my own thing, you take that risk and you can manage it yourself. And yeah, it's both are completely valid in my opinion. You find where you land. I really enjoy being able to have one foot in each camp. So sitting on the boards, working with the startups who are completely devoid of any of that kind of politics, and then helping advise them as they're trying to sell their products to banks who are 100% about that kind of operational complexity and committees of 100 people who need to approve something. A simple decision and signature takes 2 weeks. Yes, that's fast.
Oh, that's exciting. I know a lot of the people thinking about corporate careers are just getting, warm and fuzzy feelings thinking about it.
If you need to get the CFO to sign something, you can do it in under 24 hours, you're winning.
Okay. All right. I hope people are writing this down just to set the benchmark. But actually, you mentioned that, you're working with startups and you're helping them sell their products. And I guess for people who are considering starting a company and they're deciding where do they want to take investment from and how they want to raise funding, what sort of support can they look for in Visa?
So if you're just starting, then come back in like 3 or 4 years. It would be my answer. So I think we're pretty clear of where we are as Visa, right? So as an investor, we're investing directly from balance sheet. So every dollar that we invest in a startup is a dollar that we could have used to do share buybacks. And so we have to make the case to our shareholders that it's a better investment of their money to invest it in a startup than it is to just give them the cash back. Now, we don't have to make that to them on a case-by-case basis, but as a whole, the portfolio does. And so if we're going to be making that case, our CFO wants us to know that we're investing in proven companies who are going to return the equity, and it's going to have an impact on Visa's top and bottom line and drive revenue for Visa. And so we're signing partnerships and investing in that basis. We're never going to be a good seed stage or angel company investor, and I doubt many corporates really should be doing seed investments. Because you're as a seed stage company, you've got such a unknown future. Your product in 2 years is going to be completely different from what it is today. You don't know what it's going to do. It's not going to have the sufficient scale to move the needle for Visa. So you're never, ever going to get the attention that you would want from us for it to be successful. Whereas if you can come back in a couple of years and you've gone from having $1 million of revenue to $10 million of revenue, and you've now talking about you're moving billions of dollars of payment volumes or impacting $1 billion of payment, that gets exciting enough for Visa to really commit to it. So for us, and talking to most corporates, I think you need to find what their revenue drivers are and what their big key metrics. Visa is payment volume as the headline. Then you can make sure you're a big enough scale to be important enough for them. Like, I love talking to early stage startups. The enthusiasm and the opportunities are incredible, but there's no way you can ever get the Visa machine to commit to that. Some other corporate VCs will have kind of arm's length funds who are kind of single LP. And I think they'd be better vehicles because they have a little bit more independence and they have a little bit more of a benefit to take that risk early. But it's at the expense of their now arm's length from the mothership. So you're not really going to get a lot of the synergy and benefit of the big corporate backer behind it. And the final comment I'll say is you'd rather take non-dilutive revenue from a big corporate than equity investment. So if you can go and sign like a $500,000 a year contract from a bank, that's much better than taking $500,000 of equity investment.
It definitely sounds better.
Yeah.
Okay. I hope people are writing that down as well. There's a lot to be learned from this session. And then you mentioned that so I guess I'll just put it this way. So do you think for people who are hearing this and going, oh my gosh, if I start a small scale company, then it's going to be a scramble to raise funding because, Visa won't even look at me until I'm XYZ number of years into it. So do you think that people should start off in a corporate job to get used to the politics and to learn about it, even if they do want to do entrepreneurships? Or would you say jump on into it? Or what would your advice be?
So I wouldn't go and get a corporate job so you can understand the politics. That is not a good use of anyone's time. It's a necessary evil. It's not something we do because we enjoy it. I think you working in a corporate and seeing how kind of big multinationals function is you can learn a lot. And as I say, there's a bunch of the benefits you get of security and safety and all that. If you're thinking about starting your own company because you want to do something different, you should just do it. As Rishi said, the best time to start a company was yesterday, and the second best time is today. And so if you're going to go do it, you should go do it. I founded a company and went bankrupt at 21. So that was good. It took less than a year. I learned lots of things. Don't do what I did. That would be most of them. But you get to experience a bunch of stuff. And especially for students, you've got the lowest opportunity cost at this point in your life. So if you were going to go bankrupt, do it early. Don't do it late. Corporates have got a bunch of benefits though, right? You get structure, you get safety, you get the opportunity to move sideways and see lots of different roles. It's harder to have an impact when you're younger. That's just the nature of a beast. But once you figure out how to work in that machine and you can bring that machine to work on your behalf, it's pretty powerful. I'm bad at career advice because I've never really given any or taken any. I've just always kind of figured out what I should do in about 12 months time when there's an opportunity.
Okay. And so I guess that's the key takeaway. We've got 1 minute left. Do you have any other key takeaways apart from go bankrupt when you're young and otherwise try to get Visa merch so that you look cool?
No, look, it's at the moment, I echo what Rishi said, right? The fintech and banking industry is about to change a huge amount. It's like in a really stressed and difficult position right now. So it's going to be hard, but the opportunities are just absolutely astronomical right now. The number of people who've just been excluded because a lot of the incumbent banks are maybe fat and lazy and difficult to do business with and just sitting there and seeking rent. It's a very good business for them and it has been for years. But you just look at the news from people like Wirecard and everything else that's going on and you think there's definitely an opportunity to do it much better.
We have to hope so.
Yeah, don't lose $2 billion is like a good starting point.
Okay, go bankrupt young. Don't lose $2 billion. Try to get some cool merch from Visa. Yeah. All right. Hopefully this is all stuff people have written down. But yeah, thank you so much for speaking to us. Hopefully we'll get to hear some more insight from you again. I personally thought it was fun. And I hope everyone watching enjoyed it and you did too. So thank you so much for being here, Anthony.
No problem. Thank you very much for having me, guys, and good luck with the rest of the year if it gets started again in term.
Fingers are crossed. All righty. Thank you very much.
Awesome.
So that was Anthony Craufurd from Visa, who very graciously spoke to us. And now we're going to move into our next speaker, who is going to talk to us about something a little bit different. We're going to be speaking with Nick Brisbourne, who's the managing partner of Forward Partners. And they back early stage companies and provide support to help them supercharge their business. He'll talk a little bit more, I hope, about what he does and what he's done. So I'm just going to let him introduce himself. Welcome, Nick. How are you doing?
I'm doing well, thank you. Thank you for having me.
Yeah, we're super pleased to have you. If I'm correct, you're going to be speaking to us about a topic that you've prepared.
Yeah, exactly. Got a few thoughts here. Something a little bit different too. I just caught the last 5 minutes of the previous speaker. So this is more a little bit more aspirational, a little bit more future looking and thinking about how how we can all use our careers to help make the world a slightly better place, and looking at the intersection between company culture and psychology, really.
Okay, so I'm going to let you take it away, and if anyone has any questions, they can put them in the chat. Sorry, we weren't able to reach all of them in time for the previous speaker, but please leave any questions that you might have, and then if not, I also have some prepared, but for the moment, please take it away.
Cool, thank you. So I'm gonna start with a question, which is, do you suffer from a lack of meaning in your life? Or perhaps more importantly, do you think that the world is suffering from a lack of meaning? I think so. It's hard not to when you look at all the events that are playing out in the world around us now, when you see Black people being killed by police officers in the States, and the passionate response that's evoked around the world. It's hard not to when we have mental health issues at crisis levels, and our children are self-harming in their bedrooms. And it's hard not to when survey after survey shows that, despite the fact we've never been wealthier, healthier, and happier, safer, wealthier, and healthier than ever before, people are still not happy. And I think when you add all this up, it's more than suffering from a lack of meaning. I think that we're actually in the depths of a meaning crisis. And all that was true before this year. And on top of that, now we have COVID, of course, which is perhaps the greatest challenge any of us will face in our lifetimes. I know it's been really tough for a number of companies in the Forward Partners portfolio. And it's obviously been a terrible time for many people. Many thousands have tragically died. But there are some little pockets of hope. For some people, there have been some bits of good to come out of the COVID crisis. And one of those has been that lockdown has brought many families closer together. By having to spend more time with each other, it's been an opportunity to reconnect and get a better sense of people's places within their own families, and their sense of importance to each other, and their sense of shared destiny going forward. And this is really what meaning is about. There's been a huge amount of work done by scientists and philosophers on understanding what helps us to feel meaning in our lives, and they've discovered actually that there are three parts to it. And before I go any further, actually, I should really credit John Vervaeke for a lot of inspirational thinking here. He's a professor at Toronto University, and if this topic resonates with you at all, then please go read his work. Check out his YouTube channel. It's great, actually. But back to the three components of meaning. So the first is coherence. That's when you understand your world. 2, significance. It's when you feel important within that world. And 3, purpose. It's when you're making progress. When I look back at the impact that COVID has had on my company over the last few months, there's no doubt that Forward Partners, we've become a stronger company as a result. When lockdown started, like so many, we made the shift to working at home, and we were really worried about whether that was going to work. And so we asked everyone a question. We said, look, please tell us anything and everything that's going to get in the way of you doing your job effectively now you're at home. And so they told us, I'm getting a sore back because I'm having to work from my sofa. And we heard this one a lot. Both my partner and I are trying to juggle our working day and looking after our kids and homeschooling. And so what do? We drove desks around to people's houses. We rescheduled the working day so that they could look after their kids whilst still getting their work done. Simple little things. But it was an amazing time to be part of Forward Partners because we all became much closer. Taking the time to understand the problems that each of us was facing, that gave us coherence. And solving each other's problems, that gave us a sense of significance. We could see how important we were to each other. And that's given us a stronger sense of shared destiny, which has increased our sense of purpose and meaning. Now, what I've just described is one COVID-related pocket of meaning-making amidst the wider meaning crisis. It turns out it's not the only one. In fact, although the absolute numbers, I think, are still small, meaning-making is happening at an increasing number of companies, and that's given me hope that we have a path out of this meaning crisis. But before we get to that solution, I want to take you back. I want to explain why we have a meaning crisis in the first place. So when we had meaning in our lives, we used to get it from religion. Or if you think about it, all religions, they explain how the world works, why you're important, and they give you a gauge for progress. And that's all three components of meaning right there. You know, creation stories and moral codes, they give you coherence. Your status as one of God's chosen people, that gives you significance. And your path to the afterlife, that's what gives you purpose. In fact, I think one of the reasons why why religions have been so successful is precisely because they were so good at giving us meaning. In fact, the power of religion, turning it around the other way, the power of religion shows precisely just how much we crave meaning, how much we will do in order to have that meaning in our lives. So what went wrong? Why did religion stop working, and why do we now have a meaning crisis? Well, it turns out that it was science that undermined that sense of meaning. Now, don't get me wrong, science has brought untold good into the world, giving us levels of comfort and health that have been unprecedented in history, completely unprecedented. Since 1900, average global life expectancy has doubled. It is now over 70 years. World poverty has fallen from well over 80% at the beginning of the 19th century to under 20% today, and progress in recent decades has been exceptionally rapid. And finally, taking money as a proxy for comfort generally, real terms per capita GDP, that's the amount of money that we all have in our pockets adjusted for inflation. That's up 26 times over the last 200 years. So then it's science that's delivered us all of this. Science has been great for us all, and it's been great precisely because it has brought us a much better understanding of how the world works. So that's what science does. But there is a huge paradox here. While science has given us a much greater collective understanding of the world, what we experience as individuals is that we understand it less. It used to be that religion explained to me how the world came to be, and it seemed that by observing everything else myself, I could understand how the world worked. I could see how my sword worked or how to build a house. Truly, there were kind of occasional floods and natural events, and if you look at things that have been written through history, it's clearly that they troubled people a lot, those natural events, but people got by explaining those events as the wrath or benevolence of their gods. And then science showed all of that to be untrue. Copernicus was one of the earliest scientists, and as you know, he showed that the Earth isn't at the center of the universe after all, as religion had told us it was. In fact, we go around the sun rather than the other way around. And then we discovered that the world isn't flat. Well, everyone can see the world is flat. Now all of a sudden we're told we can't trust our senses. And then over time, science has shown us that more and more of the things that religion teaches us just aren't true. The world was not created in 7 days as a common example. We didn't all descend from Adam and Eve. Now, these problems, they've compounded as science has advanced and become ever more and more complicated. And if you think about where we are today, like post-Einstein and with quantum physics now, what science tells most of us is that we can't trust our religions, we can't trust our senses, and we don't understand the world at all. It's just too complicated. Our coherence, it's gone. And on top of that, science has shown us that we're insignificant, like a chance occurrence on a small planet, which is one of many planets in the corner of a massive galaxy that is itself one of many galaxies in a corner of an infinite universe. And in that same stroke, we're also denied a sense of purpose. The universe existed for an age before us, didn't it? And we lived but for the briefest amount of time, and then the universe will exist for an age after we've gone too. So that's no coherence, no significance, and no purpose. That's profoundly unsettling, and that's what it feels like to have a lack of meaning, and that's not good, huh? And you can see now how the meaning crisis is resulting in the problems I described at the beginning. but we don't have to despair. There is hope, and it comes from an unlikely source. So for most of history, business has been the enemy, hasn't it? Greedy capitalists making life miserable for everyone other than themselves, sending children down mines, polluting rivers, and generally exploiting anything that could be found to exploit. And you can see this vividly in media down the ages, from Dickens' A Christmas Carol to, more recently, one of my favorite films, Scorsese's The Wolf on Wall Street. Business it's got no heart, no soul, and business has provided no meaning. But then in the second half of the 20th century, companies started to think a little differently. Slowly they began to understand more and more that creating meaning for their people is a powerful competitive weapon. And you may have heard the story of John F. Kennedy when he visited the NASA Space Center, and he saw a janitor carrying a broom. He walked over and he asked what he was doing. "What are you doing?" he asked the janitor. And the janitor responded, "Mr. President, I'm helping put a man on the moon." Now that's coherence, isn't it? That's significance, and that is most definitely purpose. I don't know what you think, but it doesn't seem to me like that janitor is suffering from a lack of meaning. And now, here in 2020, an increasing number of companies are doing something similar to NASA. And Patagonia is one of the better known examples. In 1973, that's when they started out. They just made products for rock climbers, and their idea of high quality, simple products that cared for the environment, that appealed greatly to the climbing community, both as customers and employees. And as you know, they've built a highly authentic brand. And now, 47 years later, not only are they a top brand, but they've become a global leader in sustainability, and they've created meaning for their employees as a result. So their mission statement, and this is a good one, their mission statement reads: build the best product, cause no unnecessary harm, use business to inspire and implement solutions to the environmental crisis. So what they've done, they've created a worldview in which their business objectives align with environmental goals, and that's coherence. And their significance comes from the fact that over the last 35 years, they have donated over $100 million to preservation and restoration of the natural environment, and they've trained thousands of young activists. And as for their purpose, that comes with the company's commercial success. Unsurprisingly, with all that, staff turnover is just 4%. That's under a third of what's normal in their sector. If your work gives you meaning, why would you leave? Now, entrepreneurs and business people are following in Patagonia's footsteps, and a similar story is playing out at an increasing number of companies around the world now. And we try to do a bit at my company, Forward Partners. So we believe that entrepreneurs will solve the world's problems. That's coherence, and our job is to help them change the world, and that's what gives us our significance. Especially when we have entrepreneurs thanking us the whole time, telling us how much we've helped their companies to succeed. And our purpose, that comes from seeing our portfolio companies grow. That is great, and it's all really important, those company missions, but creating meaning for employees like that within inspiring company mission, that only goes halfway. So inside all of us, every human, there's an innate desire to learn. Learning has been essential to both our survival and our evolution as a species. It's hardwired within us, and it's companies that place personal development at the heart of their culture that are going to tap into that to solve this meaning crisis. And the reason companies will do it is that placing personal development at the heart of a company culture is hugely powerful. And it's powerful because employees who develop quickly, they love it. They literally flourish. But as well as being powerful, it's very challenging. And that's why we haven't seen much of it to date. And it's challenging because focusing on personal development every day, that upends a lot of traditional attitudes about not showing vulnerability and putting on our game face at work. To maximize personal growth, you need to do the opposite of those things. You need to expose your biggest weaknesses and encourage your colleagues to point out everything that you do wrong. And that's not easy. Now, can you pause, and I'm going to ask you another question. If you put your pen and paper down for a second. Now, I'd like you to imagine this is a thought experiment, actually, really. I want you to imagine that you've just arrived for your first day at work at a new job, and you're asked a question. And the answer to this question is going to be put on a card, which is going to be your card, and it's going to be shown to all of your colleagues. Will be their first impression of you, for many of them. So you ready for the question? Remember, this is your first day in your job. Do you identify as arrogant or insecure? Choose one. Now, which would you choose? How did being asked that question make you feel? How would you feel if either of those labels, that was a new colleague's first impression of you? And then after that, you're expected to practice the opposite behavior. So if I was to lean arrogant, and I think, I think I probably do lean arrogant, then I would have to practice speaking less in meetings, letting other people speak first, and not talking over people, all those arrogant behaviors that I should do less of. So that's what happens at NextJump, a visionary software company. And they've made the personal development of their people core to their mission. Employees at NextJump, they receive literally hundreds of bite-sized pieces of feedback, peer-to-peer feedback every week. And everyone who works there is paired up with what they call a talking partner, who they meet with first thing every morning to discuss the feedback they received the day before. And can you imagine that? That's tough, isn't it? There's a bright light shining on you the whole time. There's nowhere to hide. But it's also liberating. My colleagues know my weaknesses, and they help me to improve. I don't have to pretend, and nor do they have to pretend. There's no second guessing. And the result, everyone feels much more connected. In the language of meaning making, coherence has gone through the roof. Employees are hugely more significant to each other. And with all this feedback, the progress is very rapid. And what's great about this is that all this learning that you do at work and into the self has wide applicability. As well as helping at your job, it will help you at home with your partner, with your family, and it will transfer to your next job. Your life will be more meaningful across the board. If you think about that for a second, the power of that, it's hard to overstate. And that's why I believe, and I know this is hopeful, and we've got work to do for sure to get there. That's partly why I'm talking now. But I believe we're headed into an era where our employers will have as profound a positive impact on the quality of our society as the church used to. As well as putting roofs over our head and food on our tables, they will put contentment in our hearts. So what I've described here, it's no less than a blueprint for how and why businesses will provide a solution to our meaning crisis. By connecting employees with an inspiring mission and with the higher goal of personal development, businesses will make their people highly effective precisely by delivering meaning into their lives. Now, I'm sure that you know at least a few people who find meaning in their work. You can tell them often they have a calm joy that radiates from their faces. When I think about that, the first person I think of is Mr. Pem. He runs a flower shop at the end of my road here in Highbury, North London. And there's nothing Mr. Pem doesn't know about flowers, and he loves being the person to put them in our homes and in our hands to give us gifts. That's his purpose. Nurses often find incredible meaning in their work too. And sadly, that's often why they endure poor pay and bad working conditions. And finally, to bring it close to home, entrepreneurs often experience tremendous meaning in their work. Entrepreneurs, they have a unique understanding, and they bring a unique understanding to the world. That's what it is to have an idea for a startup. They're hugely important in solving the problem they choose to address, and they can make very rapid progress. And that's why when things are going well, it's so exhilarating to be a founder. It's one of the reasons I love being an investor. But it's also why it's so depressing when things go south. The understanding you thought you had, it turns out to be wrong. Suddenly you're on a path to irrelevance as a failed entrepreneur, and your progress is negative. Meaning is literally collapsing in front of you. But don't think about that. Imagine instead a world where everyone feels like Mr. Pem, or like a nurse, but maybe better paid, or like an entrepreneur does when they're crushing it. So imagine feeling like that yourself. What excites me is that I can see business is starting to deliver that world to us. Younger employees are demanding it, and smart employers like NextJump, they're starting to realize that investing in meaning making is the wisest investment of all. And so it's early days still for all this, and much of the meaning made in business to date has been at the hands of visionary entrepreneurs who've intuitively known it was the right thing to do. But they did it without the benefit of any foundational thinking. That science and philosophy is only coming online now. And the language of meaning making, the term meaning and the building blocks of coherence, significance and purpose, these are not terms that I hear in business. Rather, people talk in terms of culture. And yes, yeah, we hear purpose talked about, but in the narrow sense of putting a man on the moon rather than the broader sense of knowing where one is going in one's life. But thanks to Vervaeke and others, that foundational thinking, it's there now. We can, I think, for the first time, understand company culture from a scientific and philosophical perspective. And perhaps more importantly, we can, for the first time, see how creating meaning for our teams can not only help our businesses be successful, but also help our people flourish at home. And we can see how that might result in a bit less anger and a bit more harmony around the world. And because of that, I expect more and more businesses to embrace meaning making as a core competence. Now, some of you, I'm sure, will so thinking about becoming business leaders in the future. And if that's you, then I would love for you to remember what I've said here and make some changes at your workplace. You'll be better off for it if you do. And for all of you, when you leave UCL now, I would love for you to seek out companies who will make meaning for you. And then the power of the free market will weave its magic, and more employers will oblige. So that's it. Thank you for listening. If you've had any thoughts on what I've said or would like to discuss it more, then I'd love that. So maybe we have some questions now, or you can email me at nick@forwardpartners.com. Thank you.
Hi, Nick. Thank you so much for speaking. That was very engaging, and definitely some interesting points that aren't often brought up from people in the space you currently work in. I'll kick this off with a question we got from someone in the audience. Paul Garcia has asked, what type of training do you think investors would need during this reactivation of economy?
Well, that's a broad question. So when I think about the type of training that we all need in order to unlock personal growth in our lives, and this is a path that we're on at Forward Partners. You know, so we operate with 4 core objectives, and the 4th one is to make Forward Partners a great place to work, and we do that by making it a place where personal growth is a priority, and so the training that we put on to help deliver that is very varied. Lots of tools to help people reflect, and in particular, becoming good at receiving feedback is a big current focus. And so the question was about investors. So I would extend that to investors. I think what we can do at Forward Partners is first get our own house in order. But what really excites me is the power that we have as investors to introduce these concepts to our portfolio companies to help them succeed and to help them make lives better for their employees. And so it's those same sorts of training that we should then be encouraging our portfolio companies to put on for their people. And indeed, that's something that we support at Forward Partners.
Mm-hmm. So for people who are considering, they're students, but they're considering entrepreneurship moving forwards, you brought them up before, the future business leaders, right? Is that what they should be looking for when they're trying to raise funding, not just support in terms of obviously business guidance, but support in terms of, maintaining a good culture and maintaining a mission, I guess.
Yeah, absolutely. That's what I believe. I think kind of 15, 20 years ago, entrepreneurs weren't thinking at all about culture when they started their businesses. Now, good entrepreneurs are thinking about it early, and there's a really good kind of vibrant debate about, well, when is the best time to start thinking about your culture? And, there's definitely consensus once you get to kind of 40 or 50 people. If you haven't started thinking about it by then, you've left it too late. Most people, and this is what I think we would say, is once you get to kind of 10 or 20 people, then that's the time to start thinking about it. But some say, like, you should think about it from day one and just start making your culture ideas in really very early. And then it's taking the brave step, and this is a brave step because it's a difficult one, of deciding to have a culture that puts personal development at its core, and you then need to invest a lot of time in that in order to make it happen as next jump, as I was describing doing. And there's a whole set of literature on how you can do that, but that can be challenging to find the time to do that when you're just a few people.
Mm-hmm. And do you think that it's possible, or is it just a lot harder for, I guess, larger firms? Because a lot of students, come into university not knowing that much, and all they know is that a big company provides safety, but then they might be concerned that, the mission isn't there, the values aren't there. Do you think it's possible for corporates to engage with this kind of thought and with this kind of mission, or do you think they do?
An increasing number do, but it's still a small number. And so that's what I was saying at the end, right? So if you seek out an employer that will make meaning for you, that has a mission statement that you identify with because it talks to something that's important to you, like the environment, if sustainability is a big issue for you, with Patagonia. But then also you look at the way they think about personal development and training, and are they encouraging people to be vulnerable, to expose their weaknesses and helping each other grow? Or is it the sort of place where if you do that, then you just get crucified by your colleagues? And if you choose the former, then you will grow faster and you'll be happier. Right?
Mm-hmm. Okay, and so we're running out of time here. We've got just under a minute left, and I'm wondering, do you have any final advice for students, or any resources you think they should seek out aside from, the literature you already mentioned before, or any habits you think they should pick up?
So look, I would encourage you all to become entrepreneurs and to work in startups. I think the engine of growth and job creation for the UK economy. And there's a lot of good literature that you can read. So if you're thinking of founding a company, we publish a lot from Forward Partners about the kind of practicalities, the real nuts and bolts stuff of getting started in a business at thepathforward.com. Y Combinator is an accelerated program in the States that's written some really good stuff on entrepreneurship and starting a company. I check out the work of Reid Hoffman, founder of LinkedIn. He's a really good and clear thinker on a lot of this stuff. And then finally, maybe on a more fun personal note, you really need to think about looking after yourself, how you can keep yourself productive, keep yourself sane as an entrepreneur. And so I would advise meditation as my final tonic.
Okay, I think people are going to take that advice and run with it, because I think staying sane and productive is a big theme right now. So thank you so much, Nick, for speaking with us today. Hopefully people watching it live or watching it later once it's gone up will all have learned something new, and we'll have some new thoughts. And maybe if we're fortunate, we'll be able to work with you again for the upcoming academic year or in the future. So just a huge thank you to you from our team for participating in our webinar.
It would be cool to work together. Thank you.
Thank you so much.
Take care. Bye-bye.
Bye. So thank you everyone for watching. This has been our 4th episode of our webinar. This one was about investors and entrepreneurs and their perspectives. So if you're interested to find out more about our next webinar, I'll be putting up the graphic for that in a moment. It's going to focus on data science and AI, and then a little bit of, just in general, their role in society, some broader themes. So do tune in next week to find out a little bit more about that. Thank you everyone for watching. We'll see you next Monday.